If you are playing the game of infinite leverage and trying to turn $100 into $1 million within minutes or even seconds, you should better know that overall chances of winning such prize are similar to winning in a lotto game, where probability is found to be at 1 in 20 million times for the lowest price. And that one is probably a scammer. So today we are discussing how to take smaller steps but with high probability of success in investing, and also discussing US consumer debt and crypto regulations, ongoing problem that may bring some important changes. And I decided from today's publication that I will drop off Index's Outlook section. So I will just sneak in some most important aspects of this part to other sections such as market movers or economic view. So don't be scared whenever there important data happen or just anything in terms of indexes, how indexes outlook really look occur. I will just move this topic to next to this related subjects. So welcome to another episode of Blockrevision. Let's begin. And getting to market mover section, we can find from the economic calendar that we already gone through publication of rating from US that was non-farm productivity quarter over quarter, and we have missed instead of 3.2 we've indicated 2.3. So this gauge right now in a longer horizon is still increasing. So with this automation and digitalization almost of everything, we can find that we've increased our this productivity in the non-farm sector for about 12-15%. So as of recent, we can find that output advanced 7.9% and hours worked increased 5.5%. Let's now get to economy view section, and we can find that as it has published on CNBC, states cutting unemployment benefits didn't get people back to work. So that was the article that been published at on July 22nd. However, the problem still exists, as we can see on this map, where states opting out of federal unemployment programs and withdrew early has biggest problems and bigger relating to those states that has opt out later time. So big deviations from economists' projections. The last few months has hinted the labor market isn't functioning the way it did pre-pandemic. This stimulus checks mentality teaches us to live on credit. Just look at this gauge I show you. We have another record in terms of how consumer credit looks. So Fed reported in June that total consumer credit surged by the most on record, soaring by 37 billion bucks. So it was nearly doubling the consensus estimate of 23 billion, as I remember correctly. And look at another rating, revolving credit monthly change. So look at how it has splurged to a never before seen pace. Right now we are at the whooping level of 17 billion dollars. So US households are massively shifting from debit to credit cards. And in terms of how loose is credit standards right now, we are in a lower territory than it was during latest bull cycle in 2004 and 2005. So it's very easy to borrow money right now. It has nearly never been easier to take out a credit card and abuse it with impunity. So we can find right now that what will it bring to us? It's highly unprecedented. So I cannot find really words to describe it. Also, when it comes to other credits, there are student and car loans that also are skyrocketing. So the more they are give to us, the more we really want. So we have stuck in this vicious circle, and what really gets us to break it? And in order to stand behind my latest viewpoint, just look at US job openings by industry and US continuing claims pandemic unemployment assist. So we can see that this number of job openings stands out in stark contrast against the countless Americans who are still taking some benefits. So right now it's really off the charts, and we can find there are lots of this deviations between what is really going on in the US economy and what the government is really doing in order to prevent this from happening. And it's not really outstanding to see a chart like this, where NY Fed one-year inflation expectations record at 4.8% with 8 tips skyrocketing higher. So we have really trapped, we have really got too far in this government's stimulus aspects of a problem. And so problem is getting complicated, and I think there are a lot of these pandemic related effects we don't have a grip on. You don't just immediately jump back to the old equilibrium. It just takes years or even decades. After such unprecedented anomaly happens, we need really long time to get back to what it was, or maybe it won't even ever happen. And recently we were talking about how Wall Street is watching cautiously what's going on with traveling around the country in terms of predicting of how the pandemic outbreak outcome on the economy may be. So right now there wasn't nothing to really bothering from US. However, this gauge as of yesterday's publication that Chinese air travel has biggest drop since start of pandemic is really inexplicable in terms of the scale of what happened. So just look at this capacity in China that synced amid efforts to control virus outbreak. We are right now struggling at the level of what have seen during February of 2021, and in terms of how globalization is a common phenomenon right now, we can't really find a aspect of this issue may not affecting of how US traveling will be in few weeks or months. Just remember that as in China, the US recovery has mainly been driven by a surge in domestic travel. Next topic, just look at how gold has dropped after payrolls beat expectations on Friday. So we have recently discussed that gold has great environment in order to thrive. There was lowering 10-year real treasury yield, and gold couldn't really take advantage on this. So when yields dropped deeper into negative territory in the past month, gold prices even failed to keep its level at the same price. That shows how negative sentiment has become for this type of asset. And that's something what we have discussed before, whenever there is a great environment for any asset to grow, but it doesn't. It means there is something underneath that brings it back, breaks it down, and just shows us that with this environment to get a little bit worse, the asset will probably tumble. And something that adds up fuel to the fire of bullion price is US dollar that has strengthened recently on strong US jobs data. And right now we can see that we are entering again this positive positioning on this currency. So it's starting to go positive for first time since May. But it doesn't mean we are in this period of really gaining USD. I mean, whether the next months will bring a boost of this currency, I think there is not obvious answer. Whenever there is a very strict positioning, the price is tend to behave in the opposite direction. So it doesn't equally means that we are getting higher with this positive positioning of US traders. And let me broach the subject of crypto outlook right now. We are in this environment for crypto industry where we are awaiting the regulatory clarity in terms of where the industry will finally get. US infrastructure plan was recently maintaining very strict reporting requirements for developers of crypto and validators as well, while exempting miners. So what has met with a strict voice against. So the whole issue has met a resounding no from crypto society as a possible solution to the bill, which fundamentally misunderstandings, as they claim, how cryptocurrency and the decentralization works. So government has its few minutes in terms of deciding how crypto amendment, whether it will be pushed or just rejected. So all this fight of a government is to ensure that people aren't trying to avoid taxes by sheltering their money. So everything what we just need as a crypto society is to go through those regulatory issues, but without stifling innovation. So after long hours of negotiations, US lawmakers finally has introduced compromise, and right now we are in this environment. We are just awaiting the decision of House of Representatives when it will be signed into law by President Joe Biden. So crypto regulators from around the world are trying to give in their 2 cents in terms of how a regulatory process may come. So right now from Japan, we can see that the Financial Services Agency Commissioner is also in favor of Bitcoin, but not as a mean of transferring money. So he's so afraid of broader proliferation of firms involved in decentralized finance. So as he claims, we need to consider carefully whether it's necessary to make it easier for general public to invest in crypto assets. So to sum up, current regulatory framework on crypto exchanges is right now ongoing through some customer protection procedures and also anti-money laundering process. So I don't really expect any major move of BTC as of next weeks, unless this clarity won't be delivered. Right now, regulatory uncertainty surrounding many tokens is under pending legislation. And despite a minor net position changed into positive territory as of recent, bear case for Bitcoin from an on-chain perspective is the big drop in transactional activity. So unless this transactional activity won't get back to this expected levels, we don't really find to Bitcoin to get back to all-time highs levels. So I would like to see these things such as hash rate and number of transactions to pick back up, which I think there are some lagging indicators to price. So for today's trade idea section, I have a quite risky bet for you. It's a donut with a ticker DNUT that is tradable on CBOE BZX. We are right now getting out of this falling wedge pattern that should bring us out of the technical standpoint, move higher to at least recent high of 17.3 bucks. So Krispy Kreme is an American donut company and coffee house chain that was founded during 40s of the latest of the last century. And Krispy Kreme, in terms of profitability, is not at the very high position. EPS, earnings per share, are at a very high minus territory. Sales quarter over quarter is not as bad, it's 25%, but there's nothing very positive at all to be talk about it. Cash to debt at a very low level, financial strength, now as you can see, and a very low territory, profitability rank as well, and by and large valuation rank as well. So we can find that one of the green lights is this average target price of $21 as of right now of analysts, but it's mainly overweight, as we can see. So Krispy Kreme recently has even got an organic growth of only 1%, so in comparison in terms of past year, so in terms of trying to compare it with competition, it's really outstanding, and it's nothing as a good bet for the longer horizon. But the short-term swings we may take as for our advantage. So when putting on this trading board, as of here, we might have something like a trade with a target of 17.3 bucks, or maybe just a bit lower before, before this, at 17.2 with a stop loss at 14.9. So trade risk reward ratio is at 2.4, so it's not bad. And just remember about this territory of significance. I just put another territory of significance in order to consider even trading this asset is this one to stay within this range, just limited by 15.3 and 16 bucks. So if this price will get below or over these limitations, I wouldn't consider this proposition of a trade as to be valid. So just take a notice on that. In terms of days in order to take a move, there is also significant to make a move of this trade within 2 days, whether it's upwards or downwards. Otherwise, if it if it's staying within this range, it means it is not as it's supposed to be. So I would just consider then exiting a position. So in terms of Krispy Kreme, there's quite a liquid stock, so you can put not very large, but also not the smallest amount of money on the single trade. Remember about trade management. The entrance obviously is pointed by the edge of this red area. So and that's it for now. Thank you very much for watching. If you have any questions, just put it in the section below, and see you tomorrow.